Hi everybody, this is the investing teacher, high school science teacher, teaching others how to invest. In this video, I wanted to go over some real trades that I made on covered calls. I did two today. One was on Store Capital and one was on AT&T. I was just able to get to 100 shares of both of those positions, and I'll show you my thought process and how to get to the covered calls of it. Let's get going. All right, so two positions that I have recently got to 100 shares was Store Capital. They're a REIT that invests in different companies, essentially own the property, and then they rent them out to others. They are a little bit more risky than Realty Income, I think, because although they're both triple net REITs leases, they are looking at not necessarily the credit score of the company, but they want to see, are they positively growing companies? They're able to look at individual companies instead of all of Home Depot, for instance, and then be able to make lease terms with those. So a little bit more risk, but possibly higher returns. They do pay about a 5% dividend, and the 5-year growth rate is about 5% in the dividend. So 555 sounds good to me. Store Capital, I do own 100 shares. Right now, the stock's at 27.63. And looking at November 2020, I wanted to look at the $30 strike price. So if you go from 27.63 to 30, the shares will have to go up $2.37 in order for them to get called, meaning I would have to sell 100 shares at 30. So there's a little bit of buffer there. It's about a almost 10% difference between current price and the strike price. At $30 right now, the bid is 30 and the ask is 40. That did go up a bit, but I was able to sell at 32. So it ends up being 100 shares. 0.32 times 100 is $32. So I did obtain $32 here. From the bid to the ask, I typically want to go somewhere near the middle in most cases. In this case, it did shoot up a bit in the beginning of the day. Again, the share price went up 2% today. So I was in the lower end of the bid at 0.32, and I was able to get that call. The last call is at 0.36, and this is at 2 o'clock Central Time. The delta is the one that I look for carefully. 0.224 means there's about a 22% chance that this stock will go above 30. If it does go above 30, again, it's a solid 30, so I won't get the gains past 30. But again, almost 80% chance that this won't happen. So then that $32 that I made will just be a net gain in my brokerage. Same thing for AT&T. AT&T has been heavily moving today and about a 5.6% gain. They did show pretty good outlook in their earnings. A lot more people are doing HBO Max than they thought they would, or at least analysts thought, and they're able to get 20-year loans at 3% interest, which could be very good for the company in the long run as they're doing 5G and other avenues with HBO and whatnot. So I did buy enough shares to get to 100 shares here. If you're looking at the November strike prices, I went a little bit past the current price at 29.50. So I did 11.0 on 11.20. I did the 29.50 strike, and right now it's between $22 and $23. Again, Delta's 23%. So again, 23% chance it'll go past 29.50 in the next month, which I like the odds of that not necessarily happening. If it does happen, still a net gain for me because it'll go up about $1.50 a share, actually 150 bucks. And I did sell that at 22, so 22 extra dollars there. $22 almost pays for an additional share of tea. So when you look at the dividends in AT&T, it pays a 7% dividend. The dividend growth rate's about 2% per year. But if I continuously do this, 22 divided by 28, we're looking at almost 0.8% gain for this month. If you do that every month, you're looking at 9% plus the 7% dividends. That's a 16% gain, even if the stock doesn't do anything. Now, won't necessarily happen every month. I think on average I could get about 1% dividends for every 2 months to be conservative about it. So that'll be an extra 6% in dividends. Oh, sorry, 6% in premiums from the covered calls, plus 7% in dividends. We're looking at a 13% gain right there. That's assuming the stock price doesn't go anywhere. If the shares do get called at $29.50, then I will be selling a cash secured put, probably at the same price or maybe a little bit lower, and then I'll be earning more income on that regard. If you look at the puts for $29.50, right now we're looking at $1.35. Obviously, it'll be different if the share price is at that. Right now at $28.50, which is the current price, about $28.50, we're looking at $65 in additional premium. So it's called the wheel strategy, where you sell a covered call on a position you own 100 shares in. If that position gets called, meaning it hits the share price, and you have to sell 100 shares, you get money back in your brokerage, and then you sell a cash covered put with that money, and the put will mean that it has to go down to that price to buy 100 shares. So I'm going to be continuing this wheel strategy with STOR and AT&T, and definitely check the video as on my channel as I continue to do this throughout. And if you have any questions, let me know again. Like, subscribe, all that good stuff. And if you have any questions, I read all comments, so feel free to let me know, and I'll talk to you guys next time.